Joining our closing bell exchange now to discuss more on today's wild market moves, we've got Kevin Nicholson from RiverFront Investment Group, Cashin from UBS Financial Services, and Jim Paulsen from the Leuthold Group. A very good afternoon to you all. Art, I'll start with you. Main reason for the selling this morning, and what do you think turned it around for us?
The strongest reason was China. China failed to support its market, and then they made the cavalier statement that they were not concerned about trade wars and tariffs. That convinced everybody, that doesn't sound like they want to cooperate. That pulled the plug on things. We started out with pretty heavy selling in the morning, as I said on Squawk on the Street this morning, that they might be able to hold together for one reason. When they broke through some of these critical levels, there was no algorithm follow-up. There was no trapdoor selling that followed up when they did it. And that allowed for some bargain hunting. That got us back up to here. I think they're debating about going into plus territory on the Dow because it's all about China. So you've got overnight risk. And do I want to keep bargain hunting back into plus territory?
Kevin, are these worries about China overblown, especially when you get industrial earnings like we saw this morning with Caterpillar, United Technologies making comments that, yes, maybe there's potentially some slowing in China, but they're not seeing it?
Well, I think that they're not overblown because if you look at the trade wars, it's going to be an extended trade war here. And, for us, what we've done, and, we think that emerging markets is a place that we've actually pulled out of our shorter time horizon portfolios because of China slowing, because of interest rates rising, and because of, just the trade wars in general. So I think that, it makes sense for people to be concerned about the trade wars and, the effect that they're going to have as far as, inflation down the road.
Jim, do you think valuations kicked in as a reason for people to buy earlier this morning, or in fact, they're not that much support from valuations?
I personally think valuations are pretty high, Wilfred, but I do think there's a lot of people looking at forward PEs. Some estimates I've seen as high as 180 that think 15 times, a pretty good entry point in this market. I think if those earnings actually come in, it's probably not a reasonably priced market. I just think what we're going to see here is we're going to continue to have problems with a 3.7% unemployment rate, with growth pushing up cost, and that's both labor cost as well as capital costs, interest rates. It's going to keep the Fed in position to keep their process going, and that's going to keep pressuring things. And then on the other side of the coin, I think there's a slowdown that's coming. It's already happening internationally. Like in China, and I think it's coming here in the United States, and that's kind of the message of what the stock market is telling us of late. And I think that combination of continued rate pressures and slower growth, that's still going to be a challenge here for the stock market going forward.